South Africa holds the deepest, most sophisticated capital markets on the African continent. It is an incredibly lucrative environment for institutional wealth, but it is also a highly insulated market. A handful of domestic giants control nearly every transaction, loan, and corporate account. They have spent decades building deep roots. Combine market saturation with one of the most rigorously regulated financial systems in the developing world, and you get an ecosystem that acts exactly like an impenetrable fortress. Breaking in as an outsider is notoriously difficult. Because the walls are so high, a standard competitor won't survive the climb. To challenge these powerful incumbents and successfully carve out market share, an outsider needs a massive, overwhelming amount of capital. That challenge is materializing as First Abu Dhabi Bank, or FAB. It is the single largest lending institution in the United Arab Emirates. FAB manages roughly 406 billion US dollars, or 6.6 trillion rand. Its balance sheet easily exceeds the combined assets of several major South African banking groups. They deploy that wealth across 5 continents, financing sovereign governments, multinational corporations, and massive infrastructure projects. Now, they are targeting South Africa, seeking a local banking license and establishing a permanent local base. But before they could even submit an application to the local authorities, their path was blocked by a formidable legal challenge. FAB represents a level of liquidity the South African sector hasn't had to compete with internally. If the gates open, the introduction of this much capital will change the lending options available to the country's largest corporate borrowers. The opposition came from First Rand, the parent company of the domestic banking heavyweight FNB. On paper, First Rand launched a trademark dispute. They argued that registering the name First Abu Dhabi Bank in South Africa would cause confusion because it sounded too similar to their own brand identity. Trademark litigation is a highly effective strategic moat for cross-border market entry. Tying a competitor up in court delays their arrival by years. Securing intellectual property is the absolute first step. A bank cannot approach regulators without legally owning its name. Without that trademark protection secured, building a commercial infrastructure or signing initial cross-border agreements is legally impossible. In high-level global finance, the initial clash for territory is fought entirely over brand identity. The capital waits on the sidelines until the legal foundation is built. The Supreme Court of Appeal ultimately dismissed First Rand's challenge. The judges evaluated the claim and noted there was zero evidence to suggest FAB would fail to comply with South Africa's strict regulatory requirements if they proceeded with a formal application. That ruling ends the debate. The intellectual property dispute is over, and FAB is officially free to use its name. The local incumbent's primary defensive strategy failed. The legal gates are now wide open for the real capital to flow through. Despite this court victory, FAB cannot legally accept deposits or issue loans in South Africa today. They still have to clear the final and most rigorous regulatory hurdle, securing a formal banking license from the Prudential Authority. What the Supreme Court ruling provides is a secure environment. FAB can now safely hire local teams, lease physical space, and build out their commercial infrastructure while they navigate that lengthy licensing process. The state still has to approve their final application, but the artificial barriers erected by nervous competitors have been completely neutralized. If that license is granted, FAB will instantly become one of the largest foreign banking entrants into South Africa in recent years. This move establishes a direct conduit for institutional capital to move from the Gulf region into the South African market. This creates direct channels for cross-border trade finance, opening new funding pipelines for corporate and infrastructure projects across Southern Africa. Local banks, long protected by high barriers, will now face a competitor with the scale to challenge them for their largest accounts. FAB pushed through years of litigation because South Africa's deep capital markets serve as the premier gateway into the continent. This court victory ensures that a multi-billion-dollar financial bridge between the Middle East and Africa is finally open for business.